Welcome back, everybody. This is Ryan with Numbers Up Finance, bringing a market wrap video for Tuesday, April 23rd, 2019. Apologize for no video release yesterday, but we do have one coming today to cover the broad markets, and we'll touch on the nat gas analysis at the end. Just go over a couple things we see, or at least I see on the daily charts. I want to look at long-term treasury bonds as well, and I'll try to make it pretty brief. So we'll take a look at SPY real quick. We'll just cover what happened today. So what we have is a pretty impulsive day, over or just about a percentage gain in the SPY charts. And now, for anyone following the broad markets lately, you would consider this an aberration to the norm of what's been occurring, because as you can see, we've had a lot of sideways trading for about a week and a half. Nothing significant. And we did have a significant red candle back on the 17th, and it looked like we were having a turn down. Perhaps we're starting to see another little correction, perhaps a 3 to 5% pullback, and the bulls fired back today pretty strong. And now that 1% candle gain we had today, a very impulsive move up, comes with a couple connotations. So for one, we had a little bit of resistance here at 292. We pushed right through it. So we have a little bit of space now. But the second most important, one of the most important things I would say from this is we are now approaching the all-time high on SPY. Now, we already broke those all-time highs on QQQ. The previous all-time high was 187, and we're sitting at about 190 right now, 189-ish, that range. And now we're sitting at 293 to close the day for SPY, just about 94 cents, a dollar below its all-time high back in September 2018, pardon me. So, very significant there. Now, the most significant price point you can typically find on most securities, most broad indexes, and this isn't the most significant, but this is one of the most significant, is that that the all-time high. When you approach an all-time high, you are obviously, a lot of eyes are watching it, and it's not something that we're just going to push right through. Now, can it happen? Of course we can push right through it. As if it's not there, anything can happen in the markets, but I would definitely expect a reaction tomorrow. We could get a sideways trading day, with the market making up its mind on what it wants to do, where it wants to go. We could consolidate for a couple weeks along this line like we did at the 281 line, and that 281 line was incredibly strong. It took weeks for the market to finally take that out and make up its mind on it. But by all means, I would highly expect some sort of reaction here for 293. I don't really have any precise targets in mind, pullbacks in mind right now, because I'm still figuring out where I think the markets will go. Because what we need to point out as well now, and this is the third point I wanted to get to, are these divergences on the daily chart have been foiled. At least on the RSI, it's been foiled with conviction. And now we are sitting at a very, very overbought region, and that means something entirely, because back in September when we were overbought to this, right before the big correction that we had, we weren't even overbought this much. This is the most overbought we've been on SPY in quite some time. Well above that 70 RSI threshold for the overbought side of things. And, that's definitely something to keep an eye out for. So what we can do at this point is we can pair this overbought condition with a divergence that is still plenty intact on the MACD. And now if you take a volume-weighted MACD as well, which I don't have pictured here, but a volume-weighted MACD would likely have a very strong divergence in place as well. So just because we lost the divergence on the RSI doesn't mean the one on the MACD still isn't in play. It's obviously still alive. So very much so intact there. Keep an eye out for that. And yes, we followed a divergence on the RSI, but it might be a good sign for anyone looking to short, because what we're approaching now is hitting the all-time high resistance, plus overbought conditions, plus divergence still intact on the MACD. But again, do your own analysis. Make sure you know what you're comfortable with going into. Me personally, I'm just kind of sitting on the sidelines right now, because when you approach this level, sometimes you'll get a strong reaction just a couple percentage points, or a couple cents short of that level, or a couple cents after. So I really want to see how tomorrow plays out. But again, it was a pretty significant day today. So let's transition over to long-term treasury bonds. We've covered these in the past. This essentially is long-term treasury bonds measure the strength of how people are forecasting the market in the long term. So if the market's going down, long-term treasury bonds are pretty much going to go up, because we have expectations for the economy to decline in the long term, or at least in the near term, pardon me. So what we saw here was back in late March, when we had that pullback happening around that 281 level, we saw an all-time high at the treasury bonds of 127. Not an all-time high, at least on the 1 year, 1 day chart. I won't get into anything after that. But so yeah, 1 year, 1 day chart. And what was significant back in March, or late February rather, no, early March, was we cracked the super strong resistance level, which was tagged various times in the past year. We're talking about 5-6 reactions off of this line, and now we cracked it. Now I brought this chart up last week, and what I talked about was a potential for a back test to this line, and that back test is still very much in play. Okay, so we broke it, now we're back testing, and though we haven't really confirmed a reversal off of it yet, we're consolidating. We haven't broken it to the downside, so I know it's really easy to get caught up in the bullish side of things and think, okay, the bullish case just keeps playing out, and it has kept playing out for a long time now, but we are hitting those all-time highs, and we're at a very strong support level for TLT right now. Could TLT snap this support? Yes, but the thing is, a resistance that is this strong over a long period of time will likely become an equally strong support over a longer period of time once it's broken. It was broken, back test, strong support. We'll see if it plays out. Keep an eye on the TLT charts because it likely gives you inverse performance to the markets, and that's pretty important to take into account. And now we'll just transition over to QQQ. Final chart final chart we'll cover, but then we'll get into some nat gas analysis as well. Just want to touch a couple things on that. Now QQQ, you can see had pretty much a double top high at 187 back in 2018, and we cracked that with, I'd say, conviction last week, and we're sitting well above it right now. So for anyone on the bullish case, this is a pretty big check mark. And another reason it's a huge check mark is because divergences followed on the RSI, and I don't have it drawn out here, but divergences are plenty fold on the MACD as well. So, everything's looking good for the bulls on this side of the game, except for the fact that we are unbelievably overbought on QQQ. Now, last time we were this overbought, we saw, pretty small pullback. Okay, and this was recently. We're talking 2-3% correction. We obviously anticipated it to be greater, but it didn't really play out that way. And now we are just unbelievably overbought on QQQ. And hey, interpret that as you'd like, but when you get to 80 on the RSI like that, typically those are overbought market conditions. And by all means, you want to keep an eye on that. You don't want to keep funneling your money into QQQ if you're a bull in this case, because how much more room does this market have to go up until it has a little bit of a pullback? Even if you're a bull thinking that things are just going to keep going on to new highs the next couple of weeks, next couple months, that's fine. But in the meantime, as an active swing trader, this is a major red flag for anyone looking to get in the market right now. And even just look at the MACD too. It's so overextended over time. Again, we'll see how it plays out. I'd say QQQ is much better for the bullish case than SPY because SPY still has those near-term divergences in play for the MACD. QQQ has none of them. But again, both charts incredibly overbought on in terms of RSI. So keep an eye on that, and we'll see how QQQ plays out tomorrow with SPY, but more interested in SPY because SPY hasn't touched its all-time high yet. We'll likely touch tomorrow. So we'll close out the video on /NG, and I'm actually going to pop over to the 10-year, one-day charts instead of the 1-year, one-day. Just take a minute for that. And we'll just extend this price level over here so we can get a better picture of what we're working with. And this line speaks for itself, right? So, how many reactions do we have here? You can count them as resistance or support. There's just so many. So now, if we rewind back to early February, we had one of the best setups you could have for, as a swing trader. You had the strongest support you could find with a bullish divergence on the MACD. You can't ask for much more. And in that case, it played out for a nice little pop for the lawns on nat gas. But, we approached this incredibly strong 250 support level. And there are some flags that tell us, that the bullish side of things for nat gas, lawning nat gas might be the correct move. However, we're slightly oversold. Yes, we are. We aren't grossly oversold. We can be grossly overbought. If one thing nat gas has shown over time that it doesn't mind going to, incredibly low or incredibly high RSIs. So I wouldn't let that be a hindering factor in deciding your decision, because what I see off of this chart is a break of a crucial support and an intraday back test that we had today with likely room down. Now, you have more support coming if you fall back to, around 2015, 2016 when we were below this line. But the fact of the matter is this line right here for nat gas at 250, the future at 250, this isn't really a trading range by any means. This is a pretty strong line that once taken out is I wouldn't say free fall by any means, but it's been taken out pretty strong. So very hesitant to long nat gas in that regard. Looking for more buy signals on it. We do still technically have long-term divergences intact. We very much so do, as you can see here on the MACD. Not necessarily on the RSI, but the MACD definitely has a long-term bullish divergence in play. Again, that's because we're making lower lows on the price, but higher lows on the MACD, should we get a reversal on the MACD. So, again, interpret it as you want. It is, the easy money on shorting nat gas has been made at this point, I would say, and you could look for the buy signals and find a good buy for nat gas at this point, but just keep an eye on it and see how it plays out, because if you go and back test this 250 line, you will have occasional whipsaws below for pops back up, and it can go either way. So, but again, I'd say the easy money's been made off the shorts. Me personally, again, I'm sitting on my hands for a bit to get a good definitive signal on where this market wants to go. But just thought I would point this out, this pretty pivotal breakdown of a very, very significant trend line. So, but yeah, other than that, that's all I wanted to cover for today. I guess we ran a little bit longer than I would have liked, but hey, I had a couple things I wanted to point out. I thought it was an important day for the market. So please like, comment, and subscribe if you can, and leave some constructive criticism or positive feedback, whatever you can do. Trying to grow ourselves as a channel here. Whatever it takes. We want to be effective. We want to be able to teach people things. We want to be able to help some traders out, and at the same time expand our knowledge going forward. So thank you so much for watching. And as always, get your numbers up. This has been Ryan, and again, thank you for watching.